Hello there. Welcome to the Open here on BNN Bloomberg. U.S. stock futures down amid this ongoing confrontation between the U.S. and Europe over the future of Greenland. Let's get to the big stories we're bringing you from our newsroom. We've seen pressure on BHP today. The world's biggest miner is raising estimates on costs for a key potash project in Canada. That investment was approved in 2021 at a price tag of about $5.7 billion US. The Australian company has now raised its projected investment in the Jansen mine in Saskatchewan, first phase, to $8.4 billion. First production is now expected in the middle of 2027. Meanwhile, BHP broadly met estimates on production across its current core mines. Silvercorp Metals has acquired a 70% stake in Chaarat Gold for $162 million US. This gold mining company holds licensing rights to projects in Kyrgyzstan in Central Asia. The deal includes hosting fully permitted gold projects and surrounding exploration licenses. The Vancouver-based company committed to invest $150 million US for phase one and $400 million US for phase two of development of the mines in the nation. Netflix has reached an amended all-cash agreement to buy Warner Brothers as it battles Paramount to acquire the entertainment giant. Netflix previously agreed to pay in cash and stock. Warner plans to call a special meeting of shareholders to approve the deal. Netflix says stockholders should be able to vote on the transaction by April. These changes are designed to speed up a sale and address claims by Paramount that its cash tender offer is superior. A look at U.S. futures, and you can see they're down sharply amid uncertainty on the geopolitical front and, of course, the trade front after the U.S. threatened extra tariffs on European nations that oppose the bid to take over Greenland by U.S. President Donald Trump. Let's see how the TSX traded yesterday. The market getting yet another boost from gold stocks and closing in record territory. Speaking of gold, we have seen, let's have a look at oil first. And oil, there's gold. We jump right ahead. Gold hitting new record highs. The spot price topping $4,700 US for the first time. Let's have a look at oil because, of course, it could be vulnerable to a renewed trade war between the US and the Europeans, but it's holding its own right now. And let's have a look at the Canadian dollar. It gained yesterday amid weakness in the US currency, and it's higher again today. And finally, Bitcoin. That has been a painful story for those long on the biggest crypto. It's under pressure again. It looks as though part of the sell-off is just investors avoiding what are seen as riskier assets. President Trump's showing no signs of backing away from his claims on Greenland. Let's get perspective from Sadiq Kadasha, Chief Investment Officer at BMO Asset Management. Sadiq, thanks very much for joining us. A guest told us yesterday that this kind of thing, this kind of Trump aggression, for example, geopolitical tension, it tends to be disruptive to the markets, but not destructive. What do you think? Obviously, equity investors are concerned here.
Yeah, I think this is something you see constantly. Geopolitical risks or tensions in other parts of the world, they cause markets to be a little bit uneasy, a little bit nervous. You see volatility pick up, and consumers and investors get a little cautious. And that's kind of what we're seeing at the moment. It's just the uncertainty factor that has people on edge. I think as things play out, it's never as bad as it initially starts to seem, and markets start to embrace it, price it in, and we move on. We saw that last year in multiple times. We saw that with the Russia and Ukraine situation as well. So these are the type of things that I think, catch people's attention, but in the grand scheme of things, not really something that I think, you really want to react to very quickly on. Now, if information gets worse down the road, then that's a different story. But for now, I think it's just a situation where you just want to keep that in your mind, but not really adjust your portfolio significantly.
Let's have a look at a 1 year for the S&P 500. I know it almost comes down to a philosophical question here, Sadiq. Is it even possible to time the market on these things? But there might be a case to be made to lighten up on equities until there's some clarity on Greenland, surely?
Well, our view coming into the year was being bullish on equities, including the U.S. And it comes back to fundamentals. And when you look at the fundamentals of the markets, earnings have been relatively good, and they're even broadening out, which is great. We're still seeing consumer spending, and sure, they may be pulling back a little bit on that side of things. And we've seen great market returns. I think that's the part that people are getting nervous about, that because we've had so many good years of positive returns, we must have a pullback. And I don't think, that's necessarily true. But when you get things like we're seeing more recently on Greenland and other things, that helps push that cause to unwind risk or take off some equity exposure along the way. I think a better way to do that is just find hedges, things like gold, or buy options to protect on the downside. That way you stay invested, but you're hedging off some of the risk on the downside in case things do get worse.
Possibly buy put options, for example.
That's correct. Yeah. You can buy them out over various periods of time, and your cost is just the cost of the premium. You don't give up the upside, and therefore you're protected at a given level of risk that you want to take. So if you were worried about a 5% drop, more than 5% drop, you can protect from that onwards, and therefore just exposed to the bottom 5. So you can structure it in a way that makes sense to you. I think that's a better approach than just taking full equity off the table and missing any potential upside, because then you're timing the market.
Broadly for 2026, you're saying overweight U.S. equities, but remain underweight Europe, Asia, and Far East. So stick with a relatively bullish call on U.S. stocks?
Yeah, so we just did our 2026 BMO GAM Outlook call. And one of the 5 themes that we had there was definitely to be underweight international markets. And I think the key reason here is we had a great run last year, and led by some of the defense spending, dictated by what was going on in the U.S. administration. I think this recent example of what's going on with Greenland highlights that there's pressure still on Europe. I don't think it's come out of the situation where their economy is exceptionally strong and all countries there are swinging at a full level. I think we're still at a point where there's cautious. There is some optimism there, but I think you still want to see the economy move in the right direction and get to a point where you feel really comfortable about investing in that market before you go overweight. So we're underweight that market. We like the U.S. a lot more. Highlighted by the comments made earlier, that earnings still remain relatively strong. It's still the strongest economy out there, and consumers are still spending. And so, when you think about between U.S. and international markets, we will tilt towards U.S. instead.
The bonds, presumably, tell me, should every investor have a reasonable weighting in bonds, Sadiq? I know it varies, but should everybody, as a general rule, have at least some bonds?
Yeah, I think, again, it depends on your horizon. It depends on your risk tolerance. But I think to be prudent, to have a good diversified portfolio, you do need to have it. In periods like what we're seeing now, bonds will tend to do better than equities when we're volatile and nervousness across markets. Now, we have seen bonds be a little bit more correlated with equities, which is why we've been favoring more to gold. But it still is a right thing to have in your portfolio, just because of the diversification benefits it normally has.
What would you do with bonds, though? Would you go long-term bonds, which can be more volatile? They tend to do well, though, if inflation expectations are modest.
Yeah, I would say if you think right now, we're probably expecting a U.S. rate cut, maybe 2, which means the short end of the curve comes down. Not the long end changes dramatically. So, I think you just want to position carefully along that, knowing that, yes, rates are probably going to come down, but maybe not as much as people might be expecting, unless we get a flare up somewhere along the way. But I think you want to spread your bond portfolio and add a little bit of higher yielding securities there, not necessarily high yield, but investment grade, for instance, to pick up that extra yield in an environment where if rates are going down, yields might go down at some point as well. So you can pick up an extra yield component, and that's a bit of a safety within your bond portfolio.
Sadiq, thank you very much indeed.
Thanks for having me.
Sadiq Hadasha, Chief Investment Officer at BMO Asset Management. European countries set to send token numbers of troops to Greenland as tensions rise with US President Donald Trump. Should Canada get involved in any way this year? We sat down with Bob Rae, former Canadian ambassador to the UN. Okay, so we did hear from Bob Rae, Canada's former UN ambassador. We heard from him yesterday, and that was before overnight developments, including our own foreign minister, saying Canada will increase its presence in the Arctic. First off, though, let's have a listen to Rae, as I say, former Canadian ambassador to the UN. One of the topics was, should Canada send troops to Greenland?
I certainly think if Canada expects to have the support of the Europeans in our challenges that we're currently having with the United States, I think it would be wise for us to engage with the Europeans in Greenland. I think this kind of solidarity is going to be increasingly important as we deal with President Trump.
So this would be essentially a symbolic show, right? It would be a small contingent that gets sent. Should it be more strategic?
Well, I mean, it is strategic. I mean, the strategy we have to pivot to is a strategy where we understand that we cannot rely on the United States to be a rational partner because of how everything has unfolded. And I think that the notion somehow that Canada is going to just sit back and watch while what happens in Greenland or happens that's not a smart strategy. Smartest thing for us to do is recognize the world has changed. The president has told us this. The ambassador of the United States has told us this. And so we have to take the steps that we need in order to advance the security interests of Canada in the broadest sense. And that certainly includes stronger relationship with NATO, stronger relationship with Europe. And that's got to be part of the picture of what we need to do.
I guess I'm asking, should it be more and should it be faster? Instead of sending, a dozen men and women from Canada, should we be sending a larger group? Should we start sending other things and putting other things in place in Greenland for military action?
Well, I think what we're going to need to do is concentrate on our own situation in our own Arctic when it comes to the kind of resources that you're talking about. But I think it's important for Canada to be at the table with the Europeans as they discuss, well, what are the security steps that can be taken? Canada can't separate itself from that conversation. We have to be part of that conversation. And what we end up doing in Greenland is going to be part of a bigger challenge that we face, which is to deal with the security of the Arctic overall and ensuring that we don't go down the road with President Trump, which is the road he's taking with Greenland. And I think we have to do everything we can to change the president's mind and the tenor of what he's saying, because if he's really interested in the security of Greenland, then he has to be interested in NATO. He has to be interested in advancing the interests of NATO, and he has to be interested in working with us as a partner and with other countries, Scandinavian countries, for example, that have a huge interest in the Arctic. He can't just wander through and say, we're going to take over this country and that country. He has to do it as part of a strategy with other countries.
What does this do to NATO? Isn't the strength of NATO already dissipating if you have Europe and the U.S. In a dispute and perhaps a confrontation over Greenland?
Well, whose fault is that? I mean, this is a manufactured crisis, manufactured by the President of the United States and his advisors. It has nothing to do with the real situation on the ground. And it has nothing to do with what are really the security interests of Greenland or the Arctic more broadly. If the president were serious about addressing those issues, he would be talking to all of us about what we are all going to need to do to deal with the current situation with the Russians and with the Chinese and with others. And to have not only telling people what to do, but listening to what other people think we should do and understanding what other people are prepared to do. That's called a normal diplomatic military conversation among allies. What the president is doing has nothing to do with that. It has to do with shifting ground from one strategy to another, from one target to another, from one situation to another, from one press conference to another, from one tweet to another. It has nothing to do with what is normal in life. And so we have to respond to that situation as best we can. But when people talk about the crisis between Europe and the United States, between NATO and the United States, this is a crisis that's been created by the President of the United States. No one else. He's the only one who's creating this crisis. No one else is creating this crisis. Not even the Russians or the Chinese are creating the kind of crisis that he's responding to. And by the way, nobody's happier than the Russians and the Chinese at the steps that the president is taking, which make NATO's life much more difficult and pose an existential challenge not only to Canada, but to, frankly, all the countries in the alliance who are now having to figure out what can we do to protect ourselves, not from the Russians and the Chinese, but what can we do to protect ourselves from the irrationality of this president? And that's the challenge that we face.
I do want to get your response to the texts that were shared that went between the leader of Norway and the American president, Donald Trump, saying he doesn't need to think purely about peace now since he didn't get the Peace Prize.
Well, I mean, this is like Saturday Night Live. This is not taking us to a rational place. I didn't get the Nobel Prize. I'm not writing any letters to the Prime Minister of Norway. The prize is given out by a committee. It has nothing to do with the government of Norway. Everyone knows that. And it has nothing to do with anything other than a decision that's made by the Nobel Prize Committee. Given the president's attitude to Canada and the threats that he's making about us, I think most Canadians would say he doesn't deserve the prize. But what we think is irrelevant, what is relevant, is engaging in a rational way with the life of the world rather than fixating on whether or not you got a prize.
Bob Ray, there, like Saturday Night Live. I mean, it has elements of absurdity. Trump kvetching to the Norwegian Prime Minister that he didn't get the prize. We are going to hear from our own Foreign Minister, Anita Anand, after the break. Canada will be increasing its presence in the Arctic. Canadian Foreign Affairs Minister Anita Anand sat down with our Bloomberg partners on the sideline of the World Economic Forum's annual meeting in Davos, Switzerland. She talked about Arctic security and U.S. relations. Let's have a listen.
I was the Minister of National Defence between 2021 and 2023 in Canada. And at that time, the Arctic, and indeed Arctic security and sovereignty, was very much on our radar, and it continues to be the case with the Russian illegal invasion of Ukraine, for example, and Russian infrastructure moving further and further north. We, as an Arctic country, 70% of our coastline is interfacing with the Arctic, 40% of our territory. We have no choice but to ensure that we are bolstering our Arctic presence. We are doubling, our troop work and deployment nationally and internationally. We're going to make sure that we increase our defense spending to 5% of GDP, as NATO allies are doing. This is our promise. $80 billion was in our last budget for defense spending.
Are troops from NATO going to Greenland and going to Arctic regions in order to protect against possible incursions from China and from Russia or from the United States?
So the question of troops in Greenland seems to be so prevalent. Let me just say, NATO allies routinely do military exercises together. That's a fact. The point that I've been raising with Mark Rutte, the Secretary General of NATO, is historically NATO's gaze has been eastward, on the eastern flank. Canada's largest military operation is Operation Reassurance in Latvia, for example. But what I've been saying to Mark Rutte, including before the attention has been focused on Greenland, is that NATO is the North Atlantic Treaty Organization. NATO needs to have a northern and western focus. This is clear. It is one of the primary reasons that NATO was founded, in my view. Canada is a founding member of NATO, and we deeply encourage a greater focus on the Arctic. And finally, I'll say I'm headed to Greenland, a trip that was planned long before the past couple of weeks' events took place. I'll be going with my Danish and, of course, Greenlandic counterparts to open formally the Canadian consulate there during the first week of February.
Are we watching the NATO alliance collapse?
Not at all. What we are watching is the focus on geographical areas that demand attention by the strongest military alliance in the world. Canada will continue to remain at the table. We are a multilateral believer. We believe in the strength of working cooperatively and collaboratively with our allies, including at NATO and other multilateral organizations. That won't change, but we're also pragmatic. And so we come to the table in order to lead, in order to ensure that the rules-based international order, although it is shifting, is extremely important for global stability.
Are you concerned that the sovereignty of Canada is being threatened by the potential threat on Greenland's sovereignty?
Canada will never be the 51st state. We will always ensure that we stand foursquare behind our NATO allies.
Anita Anand, the Foreign Affairs Minister. Let's have a look at U.S. futures as we count down to the opening bell. Now, Bloomberg is reporting that traders are getting set for a wave of selling when they get back to their desks after the long weekend. Yesterday was Martin Luther King Day, and we can see U.S. stocks look set for a drop of 2% in early trading. We also have seen gold moving to record highs above $4,700 in another measure of investor jitters. We'll be right back with those opening bells. And there we have it, trading getting underway on Bay Street and Wall Street. At the NASDAQ, you can see there, Oxford Lane Capital is doing the honors, ringing the bell. At the NYSE, it's the Memorial Foundation. It's time for the first 15. Let's see how the markets are trading as we get going on this Tuesday morning. Right, the TSX is down, falling from yesterday's record high. And as we saw in the futures market, U.S. stocks are under pressure in the early going. In fact, Bloomberg says we could now have wiped out all of the gains for U.S. stocks. I haven't done the calculation, but we're pretty close to wiping them out, the 2026 gains. Some stocks of interest here. Let's check out Silver Corp. They plan a pretty big acquisition in Kyrgyzstan. They're buying 70% of a company called Charat Gold for $162 million. Let's have a look at some other gold stocks here as well. AEM is of interest. Of course, that's a favorite among the gold investors. That stock's been hitting record after record, and it's doing that once again. Let's have a look at Kinross as another barometer of gold sentiment, and we can see that one is trading in record territory as well. Let's have a look at Centerra, because investors, it looks like, are welcoming this preliminary economic assessment for a project that they plan in BC, and that's a brownfield, an expansion essentially of their Kemess mine. The company got an upgrade at BMO to outperform, and the price target was hiked to $17.50 from $14.75 at Bank of America. Now, Bloomberg says that was in Canadian dollar terms. I'm not 100% clear on that. It may well be. I haven't seen the original Bank of America report, but certainly, like other gold stocks, Centerra rising sharply today. Speaking of upgrades, can we put up a EQB very quickly? This is the non-bank lender. They struck a deal a few weeks ago to acquire PC Financial, and BMO is upgrading that stock today to outperform, saying that it's a strategically enhancing deal because it gives EQB access to more customers, and there's cross-selling synergies that could make customers more loyal, tie them to the company. Okay, there's a very quick look at stocks on the move in early trading. Let's check out some movers south of the border. We're joined by Jeff Morgan, Deputy Team Leader at the Bloomberg News Equities team. Jeff, great to see you, and thanks very much. Markets, I know, down today. Netflix is going all cash in its pursuit of Warner.
Yeah, Netflix is one of the stocks that's actually up today in the United States. What is happening here? You're right. They have gone all cash, and they've agreed to an amended offer to buy Warner Brothers Discovery. This all cash offer is important for the company because they have been competing on that acquisition with Paramount Skydance. Paramount Skydance had previously criticized Netflix's offer, saying that the share component of that deal, that previous deal, I suppose, made it inferior to Paramount's offer for it. So now what we have is a amended deal, takes away that share component, makes it all cash, and makes it more attractive. So the stock is rising on that this morning. The other thing that's worth watching here with Netflix today is that they report after the bell tonight. So we may get a little bit more detail, not only on kind of where that acquisition is at and what the company feels in terms of its confidence level in getting it closed, but also just the general kind of performance of the subscriber base over the last few months.
ServiceNow is on your radar as well.
ServiceNow, another one that is worth watching today, up a little bit in the pre-market session, worth watching over the course of the day. ServiceNow is in one of those verticals where there had been some expectation that artificial intelligence would be coming to potentially eat the lunch of those software companies, but they have signed a deal this morning. The Wall Street Journal was reporting anyway, that they have signed a deal with OpenAI to integrate that AI system into their platform. This is an enterprise software business, and they're going to integrate OpenAI software over the next 3 years. So this is also a stock worth watching over the course of the day. It is green, and as you mentioned, not a lot of green stocks so far this morning.
No, certainly a choppy market. Oh, 3M, I forgot to ask you about that. I am a bit of an enthusiast for Post-it notes and stationery generally, so I follow 3M closely. You know, they used to make these extreme Post-it notes with really strong glue. I can't find them anymore. Anyway, I'll pursue that.
I can't find them anymore either.
Do you know those?
It's Oh, absolutely. Yes, I would much prefer to use those than put holes in my wall. But
right.
Anyway, you're right. I can't find them. 3M is down today. This was one of the worst performing stocks in the S&P 500, perhaps because they're not offering enough of those Post-it notes that we like so much. But what is happening here, so they released guidance for 2026 this morning, which was a little bit weaker than Wall Street had expected. And in fact, JP Morgan came out this morning and said that the guidance was disappointing, even against a most recently lowered bar for guidance. So Wall Street had low expectations, and then the company didn't meet those. Barclays was also out with a note this morning that says that part of the reason for this is the tariff impact on the company's business today. So there you go, Andy. You've got some ideas on how this company can turn it around, but it's not happening today. So far, the stock's down 4%.
Bring back the extreme Post-it notes. Thank you very much, Jeff Morgan of Bloomberg. Coming up, finding opportunities in a market sell-off. There's market volatility today, a sell-off in stocks with this confrontation over Greenland. Our guest says volatility is an opportunity for investors. Let's bring in Eddie Gabor, CEO of Key Advisors Wealth Management. Eddie, thank you very much indeed. And we've been exploring this theme already. Often these geopolitical events drive down stocks, but later turn out to have created an opportunity.
We think this time is no different. I mean, I think one thing we've learned from these tariff threats is many times they're just threats. We learned a valuable lesson last year in the U.S. markets. And I think this year is much different than last year. The markets came in to today's events very strong. So the fact that we have this big drop early this morning, I think is a real opportunity. And frankly, I think that by the end of this week, it would have been not only reversed, but be in the green. So we look at today as a buying opportunity because the setup here in the first quarter for U.S. markets is as strong as we have seen in decades in regards to the trade on the economy. We want to be in economically sensitive areas and underweight the AI trade. We think the rotation is real because we think the growth in the economy is going to accelerate to the upside. So we're looking at this volatility as your friend today.
What would you recommend to investors? Is there particular areas that you think are offering particular opportunities right now?
I do. Small caps are our favorite play right now. We use the ETFs to follow the small caps. We also like housing. There's a big commitment to housing. We've seen mortgage rates come down by nearly 100 basis points. Now, today, rates are up, so we'll see how that plays out. And then industrials as well as financials. Those four areas we think will outperform technology as well as the broad market itself.
You think there's a clear rotation going on now when it comes to tech, away from the Mag 7 stocks?
I do. The Mag 7 stocks are getting weaker and weaker. And I think what's happening is there's so much money in the Mag 7 is that money, that's where it has to get sold in order to rotate into these areas. So for investors, I think now's the time to be very active and not passive in your portfolios and not look at this rotation as a head fake. We do not believe it's a head fake at all. And the market is telling us that's the case. When you look at the difference of performance in the small caps versus the Mag 7 just last week and the week before that, that is a real outperformance. And we think that trend's going to continue.
Nevertheless, you do see opportunities in some of the Mag 7 stocks, including Tesla?
Yeah, so Tesla to us is one of our favorite Mag 7s because we believe there's going to be a blow-off top at some point in time. And Tesla to us is an AI trade, and we think that will get a lot of momentum. And so we do think that stock hits new highs here by the time we get to the end of February.
The end of February. But in the meantime, we could get, what you say, a blow-off top. We could get a big sell-off in tech first.
We think we're going to get a top in technology at the end of February and sometime in March. We think the second quarter will be very challenging for technology. But before we have that big correction in technology, you're going to get that blow off top where you're going to get new highs. Names like Tesla will have the most momentum in our opinion. And so I think you have to be very cautious in getting too excited and too concentrated in the AI trade going into the second quarter next year. But the economically sensitive areas, we are not concerned with that. We think those will continue strength and momentum.
Right. And just very quickly, Apple, what would your view be? Would you put new money to work in Apple right now?
We came into this year bullish on Apple, and we're very disappointed right now in the momentum in that name. So we still own it. We would not be buying it right now. We're going to wait and see what happens in their earnings call to see if what we expected on iPhone sale acceleration to happen. If we get disappointed in earnings, we will probably cut that position to some degree. So right now we've been wrong on that so far in 2026, but we're not giving up on it yet.
You have a name for us that you reckon is a higher risk play because it's tied to a housing recovery in the States. RH, better known as Restoration Hardware.
Yes, this name has gotten really beaten up, just like housing has. The last 3 years, housing has really underperformed, and we're extremely bullish on housing. And this is a more aggressive way to play the housing market. We think RH is a great name in that space with great management, and they have a tendency to really thrive when you have an economy in the housing economy that is accelerating. And we think that is what we're going to see. So on days like today, we would add to housing and housing-related stocks versus the tech play that we just recently spoke about.
What about crypto markets? You see an opportunity there? You think that they may be bottoming?
We do. We find it hard to believe that this market is going to accelerate in this first quarter and crypto not participate in it. But crypto has a very high tendency to follow technology. So it's not a surprise to us that it's been sideways to down. But we do think it is bottoming, and we expect it to really do well over the next 60 days. But when we get the sell-off in technology we're expecting in the second quarter, we would expect crypto to lead the way in that as well, too. So it is a trade, not a 6 to 12-month hold at this point in time.
We'd better go. Eddie, thank you very much indeed for joining us, as ever.
Thank you for having me.
Eddie Gabor, CEO at Key Advisors Wealth Management. Yesterday on Market Call, we were joined by Christine Poole, Co-Chief Investment Officer at Davis Ray. The topic, North American large caps. And her top picks were Microsoft, Visa, and Fortis. Today on the show, it's Nick Marsh, Portfolio Manager at Purpose Investments, and he'll take your questions on technology stocks. Just ahead, CTV's Rachel Aiello brings us the latest from Davos. Prime Minister Mark Carney is attending the World Economic Forum in Davos, Switzerland. He's set to give speeches today and Wednesday aimed at luring investment to Canada. This comes after reports that the Canadian government is sending a small number of troops to participate in training exercises in Greenland. US President Donald Trump contends that control of Greenland is important for his so-called Golden Dome missile defense system and to fend off Russian and Chinese aggression. We are joined by CTV's Rachel Aiello. Rachel, thanks very much.
Good morning.
Big day today. What are we expecting, please?
Yeah, so Prime Minister Mark Carney is set to deliver his big speech to the World Economic Forum in about 40 minutes' time. We're expecting that to be a conversation about collaboration in an increasingly complicated world, can we say? And I do think that that really lends well into the broader issue that is looming large over the entire meeting of world leaders and big economies in Davos. And that, of course, is Donald Trump's increasing threats and pressure on other countries around his plans to take over Greenland. Now, what we'll really be watching for is whether the Prime Minister makes any remarks to that effect in his speech. But then, of course, whether the Prime Minister and U.S. President Donald Trump have any time to cross paths and have a conversation while in Davos. Right now, the Prime Minister's itinerary has him participating in some World Economic Forum events early Wednesday morning before heading wheels up to come back to Canada. Meanwhile, Trump has his big speech and events on Wednesday. So right now, there's no planned one-on-one or any sort of interaction between Trump and Carney. And we heard from Canada's finance minister this morning suggesting that if they don't end up crossing paths, Canada doesn't have a chance to register its concerns about Greenland. That's really just logistics and scheduling challenges.
So we have heard from the Minister Champagne. This morning he's not the Foreign Affairs Minister. What does he have to say?
Yeah, no, you were right. We actually heard from the finance minister and then the foreign affairs minister.
Okay.
But in terms of what Minister Champagne had to say, he was asked repeatedly from reporters about this entire Greenland situation. He affirmed that Canada's position is that the future of Greenland needs to be decided by its people and by Denmark. He was pressed on more details about the suggestion that Canada could be sending a small number of troops to Greenland. He deferred the specifics on that to the the Prime Minister and the Defense Minister, but he really also spoke about broadly what he sees or what he's hearing from folks in Davos about the role Canada can play and the role Canada has on the world stage right now. Really doing the work, I think, that the Prime Minister was intending of pitching Canada to investors, our critical minerals, for example, the way that Canada can be partnered with to diversify trade. And so that was really his focus. But obviously, once again, Donald Trump and the situation between the two countries looming over these conversations.
And one fellow who showed up at Davos with his current girlfriend, the former Prime Minister, Mr. Trudeau.
Yeah, so the Prime Minister, former Prime Minister Trudeau, was speaking about soft power. And as he was delivering this address, Katy Perry was sitting front and center, listening in to her boyfriend talk about this. And interesting of note, Katie Telford, the Prime Minister's former top staffer, was in attendance. I've seen some photos of her walking behind them. But in the conversation, Trudeau was speaking about the role he sees Canada playing as a convener, indicating that Canada's never going to be a country that wants to lead the world, so to speak, but more so sees Canada's role as bringing other countries together to have conversations. But in that, Andrew, it did kind of stand out to me. He did make a few what appeared like jabs at Donald Trump, suggesting that, you know, when Canada goes to help a country, it's not to take its oil, it's not to, you know, push Coca-Cola on them. It is to actually help. So I'm curious if that's going to catch Trump's attention or where things go from there based on what the former Prime Minister had to say today.
Critics of the mining industry would say that Canada has, in some cases, overrode local concerns when it comes to Canadian miners, but that's a topic for another day. Thank you very much indeed, Rachel. Rachel Aiello, our colleague at CTV News. Coming up, we are going to check out some early market movers on the TSX. Welcome back to The Open, and thank you very much for tuning in today. A senior government source has told our colleagues at CTV News that Ottawa is thinking about sending a small contingent of soldiers to participate in NATO training exercises in Greenland. Of course, this will be seen as symbolic of opposition on the part of Ottawa to Trump's threats to take over Greenland. Let's get more on the balancing act that's involved here from CTV's senior political correspondent, Mike Le Couture, who filed this report.
The picturesque landscape of Greenland could soon host a handful of Canadian soldiers. The members of our military would participate in training exercises with a number of European allies.
They framed it as a long-planned military exercise.
Canada's former ambassador to NATO says these deployments were originally planned to deter Russian action, but it could have the same effect on President Trump.
Trump is taking it as a message, and perhaps, you know, unspoken, the allies will think of that as a way of changing Trump's risk calculus.
Canada's troop commitment would likely be less than the dozen soldiers Germany is sending to Greenland. Still, there could be blowback for Canada, as U.S. President Donald Trump is threatening tariffs on any ally that sends troops.
Just to show the Americans that, you can't push around a NATO ally and threaten to take over a country against their will.
Now, to minimize the political fallout, some suggest appealing to Trump in a different way.
Try to turn the tables a little bit and say, let's all be in this together when it comes to the defense of the Arctic in North America, rather than make it appear as if somehow we're marshaling a force to defend Greenland from the Americans.
NBC News is also reporting Trump is complaining to aides about Canada's vulnerability in the Arctic. That's despite Canada already committing $6 billion to an over-the-horizon radar system for the far north.
We have to do more in our Arctic, but we also have to be kind of calm. More important thing is to work with our Arctic allies to deter and to get ready for any threat.
But the source of that threat in a rapidly changing geopolitical landscape depends on where you are in the world. Mike Le Couture, CTV News, Ottawa.
Let's check out the equity markets, in particular stocks that are on the move in trading today. And of course, the precious metal stocks are hot. I'm looking here at Agnico Eagle hitting a new record high. Saw a price target. The latest price I saw was $288. We're also seeing a move up sharply in Centerra Gold. Investors happy about the update on their Kemess mine expansion in British Columbia. We're also seeing DPM, which is used to be known as Dundee Precious Metals. That stock hitting its highest in at least a year, and at least some of these stocks are hitting record highs today. And Orla Mining also on the move. I always forget their symbol. In the States, it's ORLA. I can't remember what it is in Canada. It's OLA. OLA in Canada. That stock on the move. A couple of stocks, though, we have seen losing a bit of altitude in Toronto include Shopify, which was down last time I checked. And of course, that is a heavily weighted stock in our index. It's down about $6, and that's about 3%. Just looking at other stocks that have come under pressure, looks like we're seeing some selling in the banks. At least TD Bank is down, so is Bank of Nova Scotia. But Barrick Mining surging as well. Maybe not surging, but up 0.3%. And wheat and precious metals moving higher into record territory. We'll be right back. Prime Minister Mark Carney is in Davos, Switzerland, to pitch Canada as an investment destination. He's speaking at the World Economic Forum. He's set to meet the French President, Emmanuel Macron, and will deliver a keynote speech. He's expected to shed light on his views when it comes to dealing with the so-called emerging New World Order and Canada's plans to take a pragmatic approach to dealing with it and U.S. President Donald Trump. The President Trump, is also attending the forum. It's not yet clear whether he will actually meet Carney. Also at the forum, the Foreign Affairs Minister, Anita Anand, says Canada will bolster its presence in the Arctic. In an interview with Bloomberg, Anand says Canada will open a consulate in the semi-autonomous Danish territory. She said that move had been in the works before Trump triggered turmoil by threatening to take over Greenland. Netflix has reached an amended all-cash agreement to buy Warner Brothers as it battles Paramount to take over the entertainment giant. Netflix had previously agreed to pay in cash and stock. Warner plans to call a special meeting of shareholders to approve the deal. Netflix says investors should be able to vote in the transaction by April. The change is designed to speed up a deal and address claims by Paramount that its cash tender offer is superior. And there is a look at Canadian stocks. Of course, the Canadian market getting another boost today from soaring gold stocks. And let's have a quick look at the U.S. markets. They have been under pressure today because of these geopolitical concerns. The U.S., of course, was closed yesterday for Martin Luther King Day. Let's get more on this market sell-off from Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Jonathan, thanks very much. Alarming headlines. Of course, there are fears over the integrity of NATO here with this face-off between the Europeans and the U.S. What are you telling investors right now?
Yeah, kind of an interesting risk-off trade that we're seeing after this long weekend. And as you mentioned, markets were closed yesterday. Comments coming out of Washington, President Trump is really digging his heels in the sand about his position on acquiring Greenland and the implications if the countries of NATO don't go along with this, the implications of that. We're seeing pressure in our markets today because of exactly that. There are other factors that are out there that can certainly move this market, but I think that's the primary one right now. I think what's this showing us is how fragile our markets are. I don't think the market should be overly reacting the way that it is and what we're seeing right now, but it's just showing me how this market is again, fragile, right? We're trading close to the highs in some of our indices. We've seen some pretty good, movements in sectors. Investors are looking for opportunities or reasons why to take some money off the table. They're using this as an excuse right now. I wouldn't expect this particular headline to drive the market for the rest of the week. We've got a lot of other things that are going on. A couple other headlines that have gone quiet. For example, the conversations of us invading Iran or any attacks on Iran. That got very quiet very quickly as we headed into the last weekend. We've discussed the 10% cap on interest rates for credit cards. President Trump deadline today. How is that going to play out? That was a very big headline last week that no one's really talking about right now. So these are, between Iran and credit card companies, there's a few things that are going to come up. We'll see how it plays out and the impacts on the markets.
Thousands said to be killed in Iran amid these protests. And I see the head of one of Japan's huge shipping firms, Mitsui OSK, saying that we can't ignore the risk here, including potential disruption to traffic through the Strait of Hormuz.
Yeah, I mean, clearly the geopolitical risks that are out there are certainly alarming. And then on top of that, the way our global economy works and the way our trade balance works, things will get disruptive. And how does that impact companies, countries, individuals? So it's clearly something we're keeping our eyes on. How this plays out, when it plays out, is going to be rather interesting. Again, keep in mind last week, hot and heavy on Iran and what's going on there, and we have no information, no headlines from this weekend on it at all. And now we've shifted to Greenland. I don't know if this is a way of kind of distracting over here while something might be going on over there. We're going to have to see how this plays out. But I think as we discuss this, clearly the uncertainty of a lot of things that are going on right now is causing our investors to pull out of the market right now. Again, I think this is a little bit of an overreaction, but maybe we need this to kind of flush things out a little bit, wake people up a little bit, and see that money that's been waiting to come in from last year into our markets this year, see if that does in fact come in as we're starting to see some discounted prices.
Meanwhile, a domestic U.S. story is Trump's demand that credit card rates get capped at 10%. Apparently that shook investors in bank stocks. What's the latest there? I mean, we do hear it would be a tough move for Trump to make in legislative terms.
Yeah, but that hasn't stopped him before, and I think he's going to continue to power through this one. The implications of that, the ripple effects of that, we're still trying to work through. Where if you put in a cap on 10%, yes, that helps the consumers. Do the consumers use that as a help to pay down their balances, or do they use that to draw more off these balances now that the interest rates are much lower, much more attractive? From the credit card company, from the financial company point of view, they capture such a large amount of fees from high interest rates, and those high interest rates are going, for creditors who don't have a high credit score. So how does that play out? How does that impact bottom line of credit card companies? We can play both sides of this. I can see where it does help the consumer. It's not going to help the credit card companies. But for President Trump to be able to vocalize that he wants to put a cap on this and implement it rather quickly, I don't know if it's going to get the traction he wanted it to get in a short period of time. We're going to see how this plays out. Again, he did put a deadline on today. I know he's obviously has a lot of other things that he's looking at and working on. So I don't know if this one gets pushed to the side or not. But this was a big headline last week. We had all the big bank CEOs on television, really pounding the table on this and the implications of that. So I don't think this goes away quietly.
And then finally, Scott Bessent, the Treasury Secretary, not happy that the Fed's Jay Powell will attend a Supreme Court hearing on the president's attempt to dismiss a Fed governor. He says, if you're trying not to politicize the Fed, for the Fed chair to be sitting there is a real mistake. Well, I think President Trump has been trying to politicize the Fed.
Yeah, it seems like everyone's playing in the sandbox now with the same rules. Yes, in fact, the White House has been trying to pull the strings of the Fed influence. We can see the comments he's made directly and indirectly about what the Fed should do. The Fed has always stated that they're going to be apolitical and be data dependent and make their decisions that way. I think this movement now of Powell might be kind of playing a little bit into Trump's hands now, and he might use this as to his advantage in a way of saying, in fact, what you said, it's supposed to be, we're not supposed to politicize this, but that movement is showing that. So again, a lot of pieces being moved on the chessboard today.
Just, Jonathan, before we let you go, what would you say? Could you characterize the mood on Wall Street and among traders? Is there a feeling, hey, we should maybe step back from equities for a while?
If I had to summarize it in one word, I would say it's quiet, right? I think there's a lot going on. Go back a few weeks with the Venezuela headlines and what's happening now, what we've discussed now. There's a lot that's out there that can really pivot our markets. I think Wall Street is somewhat quiet now, meaning they're silent, waiting to see how this is going to play out. There's a lot of serious implications and headlines and groundbreaking measures that are in the works, and how this all plays out is going to be pretty significant to our economy and our security, and potentially reading about this in history books down the road. So I think we've all kind of are sitting and waiting for that next headline. We've got Davos going on. Watching the headlines there, the interviews that are coming out with the time difference, we're waiting and seeing what's happening. Looking ahead to next week, we've got the Fed next week. All bets are that they are going to pause and not shift interest rates at this time. I don't think any real economic data or headlines will change that pattern for now. But I think we're somewhat in a holding pattern.
Thank you very much, Jonathan. I really appreciate it. Jonathan Cortina.
Thank you. Have a great day.
Senior Managing Partner at Meridian Equity Partners. Coming up, President Trump is casting doubt on Kevin Hassett, Director of the National Economic Council, as the next Fed chair. When we come back, we'll get perspective from a former Fed official. There was news yesterday that U.S. President Donald Trump could keep Kevin Hassett in his current economic advisory role, removing him from consideration for the next Federal Reserve chair. We sat down with Thomas Honig, former chief executive of the Federal Reserve Bank of Kansas City, to discuss his take on the news that Hassett is likely out of the running.
It's not necessarily a surprise. The president, Trump, moves back and forth as he goes through this process. And, when Hassett was the lead, I wasn't so sure, because he does change his mind, and it looks like he changed his mind towards Hassett this time. I now understand that perhaps Kevin Warsh is in the lead, but no one knows. It's all speculation at this stage.
How has a probe into Jerome Powell, the current chair, change things, do you think?
Well, I don't know for sure, but it looks like what it's done is create a great deal of skepticism around the selection of Hassett. Right after that, there was a lot of discussion about it, whether, given his closeness in terms of his current role with the Trump administration, that he would give the markets any confidence of independence. And therefore, that's caused perhaps people inside the administration, perhaps Trump himself, to say, well, maybe I better, think about someone else. And Hassett is a good advisor to me in the Economic Council. So he's kind of gone down that path. I don't know that there's more explanation to it than that, but certainly some of the turmoil over the last week has had some impact on that, I'm sure.
Do you believe Powell will stay on as part of the committee even once he's done his term as chair in May?
Well, that's a hard one to read, too. I know that, given the amount of pressure on Powell and the amount of time he spent in that job, I would think he would be interested in stepping away. But given the circumstances and the fact that there is this most recent kind of challenge to the FOMC, he might temporarily stay on in terms of transition to kind of convince in his own mind whoever is selected as chairman will be able to act or be willing to act independently of the immediate oversight of the president. So those are factors that will come into his decision, I'm sure, but how he will come out, I doubt anyone knows, but maybe Powell and his wife only.
Do you think that you touched on the fact that perhaps they're looking at somebody who would be further away from the president, seeing it more as independent, and who do you think leads in that light?
Well, I mean, I think that's part of it. Perception matters, I suppose, and this will give it more of a perception of, well, they thought he would be the person. I'm choosing someone else. Hassett said he agrees with that. So this would shift the speculation towards the other three and maybe someone that no one knows about. The other three candidates, and perhaps someone that we don't even know about. So that's how you have to kind of look at this in the transition stage.
Do you think the focus for the Federal Reserve is still on the labor market and weakness seen there? And I'm asking because, of course, now we have the new threat of tariffs on European products that are coming into the U.S.
Yeah. I think for this FOMC, given what I'll call the three Republican-related nominees and Powell himself, I think employment is the issue that they will be focused or have been focused on and will continue to be focused on. And if you look at it objectively, the price index has been near 3% for a year. That does not seem to be the priority given their most recent cut. And therefore, I think employment is a very important topic. Having said that, I am of the opinion that given how strong the economy in the United States for the moment appears to be, that this next meeting they have will be one in which they will kind of wait and see, that they'll not move this time. But you never know. I mean, it is an FOMC. They are focused on unemployment, and they seem to have de-emphasized inflation. So anything can happen. But I think at the moment, they would want to wait and see and not move at this meeting.
How would you characterize affordability right now in the U.S.? It's definitely an issue for Canadians, and I'm just wondering if it's as big of an issue for Americans right now.
Well, it is an issue in the United States. It's being made an issue. Goods in the United States, services in the United States are much more expensive than they were, 3 or 4 years ago. They have also increased in the last year with the inflation that we've had, and also some asset inflation. So it has been made a political issue, and I think that has entered the picture for the president. He's talked about putting caps on credit card debt. He's talked about moving funds from Fannie and Freddie, our what I call our housing agencies in a sense, and moving funds to help fund loans, home loans. So yeah, affordability is the issue, and it's becoming very political, and decisions are being made around that topic.
And you think it'll be more of an issue as the year goes on, as we get to the midterms?
I suspect it will be. I think the Democrats will make it an issue if they can, and given the cost of housing in the United States and cost of goods, I think they will have data that they will use to make it an issue, regardless of the president's efforts.
Coming up, we've got the ETF report. We're going to talk about the flood of ETFs that were issued last year. Look out for the prospects for this year, and get some suggestions as to ETFs you should consider. We'll be right back. We know there's a boom in the ETF market. More than 1,000 new ETFs listed last year in the States. Our guest thinks this trend will continue. Aniket Ulal joins us, Senior Vice President and Head of ETF Research and Analytics at CFRA. Aniket, thank you very much indeed for joining us.
Thank you for having me.
What trends jumped out for you with ETF issuing in the States last year? I know we got a whole bunch of new product categories.
Yeah, you're absolutely right. It was a very good year for ETF investors and the industry, both in terms of flows and returns. We had over 1,100 new ETFs launched in the US. And as you mentioned, we had a couple of new interesting categories. One was auto-callable ETFs. These are essentially an ETF of notes that offer higher yield than traditional bond instruments, although there are some caveats and probably are more designed for a sideways market. We saw money market funds, 2A7 compliant money market fund ETFs launch in the US, as well as multi-coin crypto ETFs. So we've seen now in the US, the ETF ecosystem expanding from traditional low-cost beta indexing to these newer categories. Not that low-cost beta indexing is going anywhere, it's still around, but we're certainly seeing a lot of innovation in new pockets.
Tell us about a couple of these auto-callable ETFs. Can you remind me what they are, please?
Sure. So these are notes that offer higher yields in traditional bonds. They pay out a high coupon unless they hit a certain threshold. So there are certain asset thresholds. If it falls below that threshold, the notes don't pay out anymore. But if they stay within a certain range, investors get a higher yield. And these ETFs essentially hold a combination or a series of these ETFs, of these notes. So investors don't need to keep rolling from one into the other. So it's essentially a laddered exposure to auto-callable notes. So you can think of it as another way to get access to derivative income, through an ETF vehicle.
Derivative income. Okay. You have some ideas for us. Let's start off with one financial ETF that you think may offer promise for investors, and that's the Invesco KBW Bank ETF, KBWB. That one down today. The market is weak, but it's had a good run over the past year. What has this one going for it?
I think the primary thing is we've seen now most of the big banks reporting already the Q4 earnings. They've had pretty strong earnings. This is really a story of fee income. We've seen our fundamental analysts, of course, look very closely at bank stocks. And we're seeing a lot of resilience in fee income, whether it's on the capital market side with M&A transactions, as well as on the wealth management side with the markets being up. As you mentioned, we have a slight pull down today. But more broadly, we've seen a lot of asset growth. And that's certainly positive, both for the wealth management business as well as trading activity on the capital market side. So it's really a fee income story for banks in the US.
Do you have another one? The Schwab Fundamental Emerging Markets Large Company ETX, the symbol FNDE. Let's have a look at how that one has been doing. What's the advantage? And for one thing, we've seen money go into South Korea and China, you say, as of last year anyway.
Absolutely. And, we talk a lot about the AI trade in the US, and of course, US equity markets were strong in 2025, but actually were underperformed relative to a lot of emerging markets. So a big driver here is a weak dollar, particularly with, pressure to lower rates in the US. We think a weak dollar is probably here to stay. That helps emerging markets. And certain markets have had, their own individual drivers. Certainly in China, we've seen exports being strong. Despite tariffs in Korea, we've seen semiconductors drive a lot of returns. And so we think emerging markets could have another good year in 2026, which should help an ETF like FNDE.
And then finally, Vanek Pharmaceuticals. The symbol is PPH. Is this all about growth in those semaglutide drugs?
That's certainly a big driver. The biggest holding here is Lilly, which of course is a big player in that space. But more broadly, it's a story about how pharmaceuticals has certainly turned around in the last 6 months. We've seen some of these companies make deals with the US government where they've agreed to offer most favored nation or MFN pricing to Medicaid in exchange for some tariff predictability and relief. And certainly we think that's a big part of the story. Healthcare is a sector which in October we upgraded from negative to market weight. And within healthcare, we like the pharmaceuticals and biotech sector. So we think this is an ETF that, again, we have a high rating on right now.
Thanks very much indeed, Aniket. Really appreciate it.
Thank you.
Aniket Ulal, Senior Vice President and Head of ETF Research and Analytics at CFRA. Coming up, we'll bring you the latest headlines and markets, and we're on Carney Watch as the Prime Minister gets set to speak in Davos, Switzerland. The Prime Minister, Mr. Carney, is set to speak shortly in Davos, Switzerland. He is expected to pitch Canada as an investment destination at the World Economic Forum. He's also scheduled to meet the French President, Emmanuel Macron. US President Donald Trump is also attending the forum, but it's not yet clear whether he will meet Carney. We've seen some selling today in shares in BHP. The world's biggest miner is raising its estimates for costs on a key potash project in Canada. That huge Jansen mine in Saskatchewan was approved in 2021 at a cost of $5.7 billion US. But the Australian company has now raised the projected investment in the first phase to $8.4 billion. First production is now expected in the middle of 2027. Meanwhile, the miner broadly met estimates on production across current mines. And we saw some selling today in shares in 3M. The maker of stationery products and electronic materials missed profit expectations on its full-year outlook. The U.S. company has plans to reorient its new products and increase efficiencies. The CEO is actively looking at ways of shifting away from low-growth businesses. And there's a look at the North American markets. You can see we have got some selling. U.S. stocks are off the lows of the session, generally speaking. Toronto slipping from yesterday's record high. All eyes are on Davos in Switzerland this week, where global leaders are meeting at the World Economic Forum, and the Prime Minister, Mr. Carney, is expected to speak any minute now. We're joined by our own Lindsay Biscaya. Lindsay.
Yeah, and Mark Carney expected to speak around 10:30, Andy. And so we're watching for him. We'll bring that to our viewers live, of course, when he does start to speak. There's no sign of him at the podium yet, but when he arrives, we'll cut me short and get to it. But yeah, we're expecting him to speak today, talking, as you mentioned, pitching Canada as a investment destination. This seems to be his goal, right? We've seen him traveling to China, traveling to Qatar. He's going to India soon, really pitching Canada as something other countries that maybe we haven't had as much trade with in recent years could get on board with and start trading with. And so we'll be watching for that keynote speech. And we know Carney's scheduled to leave Davos tomorrow after giving another keynote speech later tomorrow. And he's going back home to Canada for a cabinet retreat on Thursday and Friday. But this is going to be really interesting to watch how he pitches things, particularly. We're just seeing so much turmoil coming out of Switzerland, what with Donald Trump and the EU, and now Emmanuel Macron, the French president himself, has been dragged into this with more tariff threats against France. And so it's going to be, as we always talk about, particularly when Mark Carney was going to China, like he's going to have to walk this really interesting tightrope. And so we'll have to wait and hear what he actually has to say.
As you say, it's a tightrope. I've seen some commentators are criticizing Carney for possibly being naive when it comes to China, which, of course, is a brutal dictatorship.
Yes. So he has been criticized for putting human rights issues to the side and more so focusing on trade. But then again, when we saw the last prime minister put trade to the side to focus on human rights issues, there was criticism there too, right? Point. So there always is, but he has been criticized for that in recent days after, reaching a potential trade deal with China. And then, of course, we're going to have to watch to see how the U.S. reacts to that. But it's been interesting watching people speak today in Davos. There's already been some commentary on these latest tariffs, which are making investors a little nervous. We're seeing the markets reacting to that today when it comes to the U.S. potentially imposing tariffs on the EU. And so President of the European Commission, Ursula von der Leyen, she was speaking this morning in Davos, and she was saying these tariffs are a mistake, particularly between long-term allies. She reminded Davos that the U.S. and the EU just came to a trade agreement in the middle of last year. And she was saying that these tariffs are not compatible with that deal. Of course, we're talking about the potential 10% tariffs on 8 different European nations that are going to go in effect next month, raising to 25% later on this year. So there's a lot to watch for. And then, of course, today, Donald Trump is threatening a 200% tariff on French wines and champagne as well, after Emmanuel Macron rejected his invitation to his peace deal plan that he has. So there's a lot of turmoil. As you mentioned, we're seeing the markets reacting today. Swiss franc is up. The American dollar is down, and we're going to have to continue to watch to see what Mark Carney, exactly what he has to say. All eyes are kind of on Davos, listening to where Canada is going to go in between everything that's happening right now.
Mr. Macron, the French leader, saying apparently we are telling Trump, according to what the president says, the president posted on Truth Social, my friend, we are totally in line on Syria. This is Macron to Trump. We can do great things on Iran. I don't understand what you're doing on Greenland.
These are the text messages from
Macron
to Donald Trump.
According to Trump.
Yes. So that's kind of where all this is starting, right? Just for our viewers who maybe have tuned out of the news, we wouldn't blame you over the last couple of days, is this U.S. attempt to take control of Greenland. And we're seeing a lot of talk. That text came to light today. Obviously, Emmanuel Macron not on board with what the U.S. is planning for Greenland. A lot of European nations not on board. We know Ursula von der Leyen was saying that Europe is working on a package for Arctic security. We heard Canada's Foreign Affairs Minister, Anita Anand, saying something similar. She says Canada is going to boost its presence in the Arctic, opening a consulate in Greenland over the next month.
Which she says was already in the works.
She said, yes, exactly. But it just goes to show that finally people are, I don't mean finally, but some nations are not on board with what the U.S. is planning for Greenland, saying it's a territory of Denmark. And this is where all this kind of turmoil and these threats of tariffs are coming from. And yes, Emmanuel Macron also saying he doesn't understand what's happening.
Now, the latest timing apparently is that the president was set to depart Washington tonight for Switzerland, and that Macron had also proposed a meeting or a dinner between the two leaders on Thursday.
He had invited Donald Trump for dinner, yes, and we know that Mark Carney also was meeting with Emmanuel Macron before this as well. So yeah, there is talk happening. And I think that's what also we've heard from economists when it comes to the effects and the impacts on the market is there's so much talk right now when it comes to Donald Trump threatening tariffs here, there, that it seems as though people are a little more immune to it. But obviously right now we see, the French president trying to kind of settle things down with Donald Trump, trying to invite him and talk things out rather than seeing what might happen or come to fruition in Greenland.
Lindsay, thank you very much. Apparently, the Prime Minister is walking to the stage in Davos, Switzerland, and we're expecting to hear shortly from him.
Hi, everyone. It's a great honor for me to introduce Mark Carney, Prime Minister of Canada, along with Gideon Rockman from the Financial Times. Much of the dialogue over the next few days will focus on where the puck is going. You like that, Mark? Okay. Where the puck is going next in the global economy, which makes this a fitting moment to introduce a former hockey player, the Prime Minister of Canada, Mark Carney. The ability to remain calm in fast-moving, high-pressure moments has defined Mark's career. In 2008, he led the Bank of Canada and helped steer his economy through the worst market turmoil in all our lives, in our generation. In the aftermath of Brexit, he became the first non-Brit to serve as a governor of the Bank of England. And last year, he was elected very deservingly as Prime Minister for Canada. And what may be one of the most pivotal moments in modern Canadian history. Today, Prime Minister Carney is focused on making Canada a place where it's easier to build, simpler to trade, smarter to invest in, and build more unity across its nation. For 41 million Canadians, the world's 10th largest economy, he is a steady and thoughtful leader, and I am proud to call him a friend. Please join me in welcoming Prime Minister of Canada, Mark Carney.
Thank you very much, Larry. I'm going to start in French, and then I'll switch back to English. Merci, Larry.
Thank you, Larry. It is both a pleasure and a duty to be with you tonight in this pivotal moment that Canada and the world are going through. Today I will talk about a rupture in the world order, the end of a pleasant fiction and the beginning of a harsh reality, where the large main power geopolitics is submitted to no limits, no constraints. On the other hand, I would like to tell you that the other countries, especially intermediate powers like Canada, are not powerless. They have the capacity to build a new order that encompasses our values, such as respect for human rights, sustainable development, solidarity, sovereignty, and territorial integrity of the various states. The power of the less power starts with honesty.
It seems that every day we're reminded that we live in an era of great power rivalry, that the rules-based order is fading, that the strong can do what they can and the weak must suffer what they must. And this aphorism of Thucydides is presented as inevitable, as the natural logic of international relations reasserting itself. And faced with this logic, there is a strong tendency for countries to go along to get along, to accommodate, to avoid trouble, to hope that compliance will buy safety. Well, it won't. So what are our options? In 1978, the Czech dissident Václav Havel, later president, wrote an essay called The Power of the Powerless. And in it, he asked a simple question: how did the communist system sustain itself? And his answer began with a greengrocer. Every morning, this shopkeeper places a sign in his window: "Workers of the world unite." He doesn't believe it. No one does. But he places the sign anyway to avoid trouble, to signal compliance, to get along. And because every shopkeeper on every street does the same, the system persists. Not through violence alone, but through the participation of ordinary people in rituals they privately know to be false. Havel called this living within a lie. The system's power comes not from its truth, but from everyone's willingness to perform as if it were true. And its fragility comes from the same source. When even one person stops performing, when the greengrocer removes his sign, the illusion begins to crack. Friends, it is time for companies and countries to take their signs down. For decades, countries like Canada prospered under what we called the rules-based international order. We joined its institutions, we praised its principles, we benefited from its predictability. And because of that, we could pursue values-based foreign policies under its protection. We knew the story of the international rules-based order was partially false, that the strongest would exempt themselves when convenient, that trade rules were enforced asymmetrically. And we knew that international law applied with varying rigor depending on the identity of the accused or the victim. This fiction was useful. And American hegemony in particular helped provide public goods, open sea lanes, a stable financial system, collective security, and support for frameworks for resolving disputes. So we placed the sign in the window. We participated in the rituals, and we largely avoided calling out the gaps between rhetoric and reality. This bargain no longer works. Let me be direct. We are in the midst of a rupture, not a transition. Over the past 2 decades, a series of crises in finance, health, energy, and geopolitics have laid bare the risks of extreme global integration. But more recently, great powers have begun using economic integration as weapons. Tariffs as leverage, financial infrastructure as coercion, supply chains as vulnerabilities to be exploited. You cannot live within the lie of mutual benefit through integration when integration becomes the source of your subordination. The multilateral institutions on which the middle powers have relied, the WTO, the UN, the COP, the architecture, the very architecture of collective problem solving are under threat. And as a result, many countries are drawing the same conclusions, that they must develop greater strategic autonomy in energy, food, critical minerals, in finance and supply chains. And this impulse is understandable. A country that can't feed itself, fuel itself, or defend itself has few options. When the rules no longer protect you, you must protect yourself. But let's be clear-eyed about where this leads. A world of fortresses will be poorer, more fragile, and less sustainable. And there's another truth. If great powers abandon even the pretense of rules and values for the unhindered pursuit of their power and interests, the gains from transactionalism will become harder to replicate. Hegemons cannot continually monetize their relationships. Allies will diversify to hedge against uncertainty. They'll buy insurance, increase options, in order to rebuild sovereignty. Sovereignty that was once grounded in rules, but will increasingly be anchored in the ability to withstand pressure. This room knows this is classic risk management. Risk management comes at a price. But that cost of strategic autonomy, of sovereignty, can also be shared. Collective investments in resilience are cheaper than everyone building their own fortresses. Shared standards reduce fragmentations. Complementarities are positive sum. And the question for middle powers like Canada is not whether to adapt to the new reality. We must. The question is whether we adapt by simply building higher walls or whether we can do something more ambitious. Now, Canada was amongst the first to hear the wake-up call, leading us to fundamentally shift our strategic posture. Canadians know that our old, comfortable assumptions that our geography and alliance memberships automatically conferred prosperity and security, that assumption is no longer valid. And our new approach rests on what Alexander Stubb, the President of Finland, has termed value-based realism. Or to put another way, we aim to be both principled and pragmatic. Principled in our commitment to fundamental values, sovereignty, territorial integrity, the prohibition of the use of force except when consistent with the UN Charter, and respect for human rights. And pragmatic in recognizing that progress is often incremental, that interests diverge, that not every partner will share all of our values. So we're engaging broadly, strategically, with open eyes. We actively take on the world as it is, not wait around for a world we wish to be. We are calibrating our relationships so their depth reflects our values. And we're prioritizing broad engagement to maximize our influence, given the fluidity of the world at the moment, the risks that this poses, and the stakes for what comes next. And we are no longer just relying on the strength of our values, but also the value of our strength. We are building that strength at home. Since my government took office, we have cut taxes on incomes, on capital gains, and business investment. We have removed all federal barriers to interprovincial trade. We are fast-tracking $1 trillion of investments in energy, AI, critical minerals, new trade corridors, and beyond. We're doubling our defense spending by the end of this decade, and we're doing so in ways that build our domestic industries. And we are rapidly diversifying abroad. We've agreed a comprehensive strategic partnership with the EU, including joining SAFE, the European Defence Procurement Arrangements. We have signed 12 other trade and security deals on 4 continents in 6 months. The past few days, we've concluded new strategic partnerships with China and Qatar. We're negotiating free trade pacts with India, ASEAN, Thailand, Philippines, and Mercosur. We're doing something else. To help solve global problems, we're pursuing variable geometry. In other words, different coalitions for different issues based on common values and interests. So on Ukraine, we're a core member of the Coalition of the Willing and one of the largest per capita contributors to its defense and security. On Arctic sovereignty, we stand firmly with Greenland and Denmark and fully support their unique right to determine Greenland's future. Our commitment to NATO's Article 5 is unwavering. So we're working with our NATO allies, including the Nordic-Baltic Gate, to further secure the alliance's northern and western flanks, including through Canada's unprecedented investments in over-the-horizon radar, in submarines, in aircraft, and boots on the ground, boots on the ice. Canada strongly opposes tariffs over Greenland and calls for focused talks to achieve our shared objectives of security and prosperity in the Arctic. On plurilateral trade, we're championing efforts to build a bridge between the Trans-Pacific Partnership and the European Union, which would create a new trading bloc of 1.5 billion people. On critical minerals, we're forming buyers' clubs anchored in the G7 so that the world can diversify away from concentrated supply. And on AI, we're cooperating with like-minded democracies to ensure that we won't ultimately be forced to choose between hegemons and hyperscalers. This is not naive multilateralism, nor is it relying on their institutions. It's building coalitions that work, issues by issue, with partners who share enough common ground to act together. In some cases, this will be the vast majority of nations. What it's doing is creating a dense web of connections across trade, investment, culture, on which we can draw for future challenges and opportunities. Argue the middle powers must act together because if we're not at the table, we're on the menu. But I'd also say that great powers can afford for now to go it alone. They have the market size, the military capacity, and the leverage to dictate terms. Middle powers do not. But when we only negotiate bilaterally with a hegemon, we negotiate from weakness. We accept what's offered. We compete with each other to be the most accommodating. This is not sovereignty. It's the performance of sovereignty while accepting subordination. In a world of great power rivalry, the countries in between have a choice: compete with each other for favor, or to combine to create a third path with impact. We shouldn't allow the rise of hard power to blind us to the fact that the power of legitimacy, integrity, and rules will remain strong if we choose to wield them together. Which brings me back to Havel. What does it mean for middle powers to live the truth? Well, first, it means naming reality. Stop invoking rules-based international order as though it still functions as advertised. Call it what it is: a system of intensifying great power rivalry where the most powerful pursue their interests using economic integration as coercion. It means acting consistently, applying the same standards to allies and rivals. When middle powers criticize economic intimidation from one direction but stay silent when it comes from another, we are keeping the sign in the window. It means building what we claim to believe in. Rather than waiting for the old order to be restored, it means creating institutions and agreements that function as described. And it means reducing the leverage that enables coercion. That's building a strong domestic economy. It should be every government's immediate priority. And diversification internationally is not just economic prudence, it's a material foundation for honest foreign policy, because countries earn the right to principled stands by reducing their vulnerability to retaliation. So Canada. Canada has what the world wants. We are an energy superpower. We hold vast reserves of critical minerals. We have the most educated population in the world. Our pension funds are amongst the world's largest and most sophisticated investors. In other words, we have capital, talent. We also have a government with immense fiscal capacity to act decisively. And we have the values to which many others aspire. Canada is a pluralistic society that works. Our public square is loud, diverse, and free. Canadians remain committed to sustainability. We are a stable and reliable partner in a world that is anything but. A partner that builds and values relationships for the long term. And we have something else. We have a recognition of what's happening and a determination to act accordingly. We understand that this rupture calls for more than adaptation. It calls for honesty about the world as it is. We are taking the sign out of the window. We know the old order is not coming back. We shouldn't mourn it. Nostalgia is not a strategy. But we believe that from the fracture, we can build something bigger, better, stronger, more just. This is the task of the middle powers. The countries that have the most to lose from a world of fortresses and a most to gain from genuine cooperation. The powerful have their power. But we have something too. The capacity to stop pretending, to name reality, to build our strength at home, and to act together. That is Canada's path. We choose it openly and confidently, and it is a path wide open to any country willing to take it with us. Thank you very much.
There's the Prime Minister speaking on what he calls the New World Order at the World Economic Forum in Davos, Switzerland. Really an extraordinary speech by a Canadian Prime Minister, lamenting the rise of what he called hegemons. Hegemon, of course, is a powerful individual or state that can push others around. And by he didn't name the US in his speech, but obviously he means Washington as part of what he says are hegemons. Exploiting economic integration to get their way. He said, to some extent, the rules-based economic order of the past was a fiction. He compares it to the dream world of communism, where everybody paid lip service to the power of the worker. But pretty amazing. He says Canada is willing to change drastically, strike new alliances to counteract what he says is this power being flexed by the world's most powerful nations. It's kind of shocking it's come to this. We're going to wrap up the Open there. Morning Markets is up next.